Good day. Ira Epstein of Linn Associates with your financial market wrap-up. And this wrap-up is for Monday, the 4th of May, 2020, but we're about 5:20 p.m. And after 5 p.m., what happens is the markets and many of the Globex markets reopen. So we've got our reopening. We've popped higher in everything, and it's an interesting time. You know, intraday, the Dow on Monday morning was down 350 points. It rallied back, didn't close higher, but now it's jumping. And of course, the leader's been the NASDAQ, the leader of the pack. Remember that song? Well, that's what it is, the leader of the pack. The dollar closed fairly strong. Most currencies tonight are very, very quiet, but we are getting more of a rally in the energy markets, which have suddenly come to life off the idea, if you keep watching what's going on, that we keep losing wells in our shale industry at a dramatic pace. I mean, we lost overall, 50 wells, be it the regular or the horizontal wells just over this weekend. We're now down to numbers in some that are back into the 2015-16 range. So the production has come off there. We know that OPEC is cutting its production. Other countries are trying to get it. So stability is coming back in. And I don't think we're going to look back, I doubt, anytime soon to see where we get to a negative $40 a barrel. I'd never seen anything like that, but it did occur. Bonds and notes pretty flat right now. And Bitcoin, don't lose sight of what's going on in Bitcoin. The halving, where the computers, the same work they're doing, they'll produce only half as many Bitcoins starting on May 11th going forward, and that gives you less supply. And remember, there is a finite supply there. In the S&P, the last rally high we had was 2870. So I'm looking to see, does the market end up with the sell may go away mentality or not? Well, one of the ways to know it is if you get much over 2870, that didn't go away, right? So we have a number that we can look at, and that number was made, just so we can see the date here, that was made on April 17th. So it's very much a good number. Admittedly, it's a weekly area chart of closes, so you know you might want to go to the regular charts and see where you were, and we'll come back there in a moment, but you can see where this is. Now, if we come up for the month of April, you were just over here, the 2950 area. The market got up to over a 62% retracement, fell back to the 50 level, but more important, the pattern of the market is still bullish. You have a higher lows, you have higher highs. Now, so far tonight, the high of Monday was 2835.75. We haven't taken that out in early evening trade. If we do, I'm just giving you the if we do, and if the market were to get back under 2771, it would be a very good sign that this market has made a top. Why? You could end up with lower highs and a lower low instead of the current pattern that you have. So I'm assuming that the market's going to try to get through that, and we'll see if it reverses. I'm not one to call the reversal. I'm just here to tell you what the chart action is. Right now, if you don't take that out and you drop, the number that the bulls don't want to see taken out is right there. And that number is, let's get it, that number is 2755.25. So we have two numbers to be looking at, and the trend is up. No getting away from that. The other part that the battle's happening at is the 18-day average of closes. For regular viewers of mine, for years, you have heard me say that is the line in the sand. Often, it's the point at which when you're under it, you're bearish, markets that get away from it, pull back to that number and fight a battle. You get over it, it pulls back and fights another battle. In this market, the problem is, even if you clear this high, you have some tremendous resistance points at the 200-day moving average and the 100. So things to watch there. There's another setup that could happen here that gets ugly. Right now, the 100-day average is at 302.64. versus the 200, 301.61. If this market breaks down, that 100-day average is going to cross. Then you'd have the 18-day average under the 100 under the 200, and if prices were under all of it, it's a bear pattern. On moving averages, that would be a bear pattern. Don't have to write me letters. I'm not interested. That's what it would be. In the Bollinger Bands, which are an algorithm designed to keep the market on the top part within it, bottom part within it. The market got up, did its job. The first challenge of the Bollinger Band, this was Wednesday, hit it on Thursday. And I know that I came out to my subscribers and I was saying, clear the decks. That's your first challenge. The odds favor the market's going to give you a back off. Market pulled back, and this is the battleground you're fighting since then. But again, that first challenge is often where pros take money off the table. You never quite know how deep it's going to break, and you don't know if it's going to be a trend changer. But that's what I'd be telling, if you were sitting next to me, that's where I'd be teaching you to do these type of things. Do you have to come out of all your position? That's up to you. Some people trade big, some small. Everybody's got a different way of doing it. I see divergence here that I don't like. I've got momentum pointing down, prices trying to hold on to the 18-day average of closes, and that is a concern to me. And as I said, if you get up and over the highs of Monday and then you head down, well, I've got a target then of the 2720 area. That's if. I'm not saying it will happen. In the NASDAQ, the battleground is the 100-day average in green and the 18-day. You got up, made your challenge of the upper Bollinger Band, pulled back. But more important in this market, you had an embedded reading. Embedded is when the two numbers that make up the slow stochastic are going sideways over 80 for several days or more. When it loses that, it often does it just before. Here's the numbers, they were both still over 80, just before prices make a run at the lower moving average, the closest of the lower moving averages. That's where you're at. I'm going to look for that to be the case. That's what happened today, and you could see we're holding it. Now, this chart doesn't differ from the S&P. If you look at tonight, 88.2850 is tonight's high. Today, we hit 88.28. It's already done what I just said on the S&P. You've made your higher high. If this market takes out 85.56, it would not be a surprise to see a move to the downside, since momentum's already pointing down, trying to get to the 200-day average to the lower Bollinger Band, which is around 82.92. A real tricky area that you're at. Market is fighting to stay bullish right now. In the Dow, the market stepped back. And if you look, your momentum, you got overbought. This market did not embed. You hit the upper Bollinger Band. When I don't say this, you got to call me out on it, but the first challenge of a Bollinger Band is where I expect pros to take money off the table. The market backed off, still backing off and fighting a battle right at that 18-day average. Momentum still pointing down here. Russell, did we get up and over? So today's high in the market was 1263.50. Haven't quite gotten over it yet. It would fit into the other realm of just the way that I did it, so I'm not going to waste all this time. And if it doesn't do it and breaks down, the number it should not take out is right back there. Momentum is down in all these indices. That's my point. Suddenly we've got divergence. We'll see if momentum gets pulled up by price or if momentum's going to rule the day. It typically rules the day, but the word typically is not the same as always. Do we agree with that? In the VIX, when the market first hit the lower Bollinger Band, subscribers to my morning subscriber video know that I said, and I wrote about it in my subscriber newsletter, that I want to see, are the pros going to write puts on the first breakdown there, trying to see if prices can get back to the 18-day average of closes. Do yourself a favor. Go back last year. Don't go into the March period. We made the February area and then the March break and all. Go back. See how often that scenario was going on, especially on the put scenario. The call scenario is always much harder. When you're trading between 10 and 15 in it, it's easier to go to 30, 40, whatever. When you're trading at 10 or 15, it is very hard to drop to 7. That's the point that I was making all year. And now, is this the new norm? I don't know. But somewhere along the line here, we're getting to a point where instead of the 10-15 range or whatever we had as that range in the VIX cash, we're going to establish a new higher range because of this COVID-19 and all that is going on and all the money that's being printed. So different risk element now. T-bonds. Do I need to say neutral? This is called a pipe. And the market is trading, think of this as the bottle, melted, and prices are just going back and forth. When I first came up with my ideas on moving averages, I learned a lot from this. And then I learned how the market tries to break away from it one way or the other, and that seems to be what it's doing. Momentum's trying to point down. The trend is up. You still have higher highs, higher lows. You're not going anywhere. You're just spinning your wheels, and the same is identical in the 10-year notes. This is the most dangerous time in these markets right there, and that's because you think you got a trade that's going to break out, and it doesn't, and it's already been happening. Think of all that's going on. Dollar index. Market got oversold. It's trying to correct itself. Where else did it go? Market went down to the lower Bollinger Band, not quite there, but it does for good measure on Friday. So you're getting a bounce away. That's exactly what we expect. Now, are we oversold? We are. A 29 reading, you got to be over 30 to not be oversold. It can come out of oversold easily tonight. What negates the downtrend? Getting over 99, 95 and a half. What about in the euro? In the euro, I've warned you that we're going to have a big deal tomorrow out of Germany. And that's like going through a Federal Reserve or a central bank report. Why do it? Let's see what it does, and then you make your decision. Going in, it's friendly. You've got a pattern of higher lows, higher highs, until you take out this low, and that low is specifically 108.20 and a half. The bulls are in control of the market. But the market had gotten to the Bollinger top, and now it's fallen back towards that line in the sand, that 18-day average. Japanese yen still very much in an uptrend, or is it? Well, the pattern here is higher lows, but now you got lower highs. So you really got to get back over this high, 93.86, to reestablish that it's making higher highs, higher lows, but it's overbought. What are you buying for? That becomes the question, and you got pretty stiff resistance. This has become one of those pipes again. Bitcoin. Bitcoin's got the halving day, May 11th. So going forward, after that, the same computer horsepower, everything it's doing, you're only going to get half as many coins, and the finite numbers coming up sooner rather than later. You also embedded the reading, so it's still very bullish. Resistance, the upper Bollinger Band, and the bulls are in control. In the crude versus WTI, Brent versus WTI, sitting here at 455. Now we're going to get tomorrow the API numbers. We'll see if we start seeing drops. I don't think any of us expect it just yet. Driving in America coming back. You know, we're going to have 40 some odd states by this month back where the shut-ins are done. We might by the end of the month be out of it all. At some point there's going to be demand for this, and maybe we finally said that the $20 area is just plain too cheap. I don't know. The chart is not bullish. All you did is took the swing line in an uptrend into the 18-day average, and you're back to that line in the sand. And you haven't even done it yet in WTI, so I'm expecting the resistance 24.40. Then we get to RBOB gasoline. I'm going to repeat again. This is that sideways pattern. I lean to being bullish. Why? I believe people are going to drive. I believe that they're still going to take a summer driving vacation. They may not go to populated cities, but they're going to go. They're going to drive. That could create demand for the gasoline. Is this a base? Why not? 61 cents? I don't think it's a top. So I'm thinking this market is looking more and more bullish, and I'm looking for reasons to join the parade. Natural gas. I like what I've been seeing here, and I think I've been mentioning that steadily, that I like the fact that you had a bullish crossover. The 18-day average got over the 100. And when that happens, you often get what? A move to the upside. And this market's trying just to do that. So I'm liking what I'm seeing there. But one of the things I do like to do for you, I don't know if I can get to it, my morning subscriber video. You might want to go to our website, take a look. It's at www.iraepstein.com. Go to the word research. It explains in detail how that works. I start recording 5:40 in the morning, and the idea is to get this into you well around 6:30, 6:40 in the morning. So whatever time zone you're in, it's before traders really start plowing into the market after 7:30. When most reports begin coming out, we get most American economic data between 7:30 and 9 in the morning. I want that in your hand before then. I'm Ira. Have a great day. I'll see you tomorrow.